Good morning, everyone. Welcome to Admiral Markets. Thanks for joining us in this strategy webinar on the 10th of December. Before we start looking at the strategies in the Forex market, though, please be aware of these disclaimers. First of all, it is important to note that the webinar is intended for a global audience, and it may not be suitable for everyone. To find out if it is suitable or not and other charting conditions and other details, take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, please be aware that trading for exchange and other financial markets is considered high risk and it may not be suitable for all traders and investors. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for educational and informational purposes only. And by continuing watching this webinar, you agree with the disclaimer mentioned here. You can always request a copy by taking the same steps as mentioned here to get a copy of this disclaimer. All right. Today we're going to be focusing on strategy. What kind of strategies can we use to tackle the market? Strategy, of course, indicating a sequence of steps and indicating what we're looking for in those steps regarding tools, indicators, and let's say behavior of price before trading it. We can use various tools. Of course, most tools that we use in this trading room are fibs, trend lines, moving averages, pivot points, divergence, and then we use, of course, some analytics like chart patterns, candlestick patterns as well to establish a trading plan. So we'll be focusing on these elements with regard to the strategy webinar. If you have any preference, let me know. Otherwise, I'll just start probably with the moving averages. As we left off with that, as we were focusing on moving averages yesterday, we'll continue with that where we left off. But after that, perhaps fibs. I don't know. If you have any suggestions, what you would like to see, let me know. Alrighty. So euro dollar went up a lot more. No, wait, before we actually do that, quick look at the calendar. Sorry about that. We have some euro news, dollar news, all kind of lighter stuff, pound trade balance. New Zealand interest rate is later today, or actually tomorrow for New Zealand itself. And let's see if it stays 3.5. Alrighty, so back to the euro dollar. So ultimately, price exceeded the minus 618 target and went to the minus 1,000 target, which surprised me, took me a bit by surprise, that burst of such a big momentum. Ultimately, price couldn't break this high and couldn't break last week's high. So goes again, proves to me that by using an overly tight stop loss here, I kind of got myself into trouble because I put it above the minus 618. But where did I put the stop loss in fact? Now, if I analyze my own trading, I put my own stop loss actually below a top. So that was maybe not the best of decisions. As you can see, always it's tempting to use a tight stop loss, but it sometimes backfires, and a looser one means that trader is still in this trade. So sometimes it's tempting to do, but you can see sometimes also very inconvenient if price does just accelerate through a certain level that seems pretty decent, but not maybe as tight and as good as a looser one. And you can see what kind of disadvantage that sometimes has. Yesterday's intraday trend was up. The bigger trend is down, obviously, and I got caught. My stop loss got snapped. So that was a bit annoying, but occasionally that will happen, obviously. And I myself, in the video analysis that I provide for Admiral Markets on Mondays, by the way, just in case you didn't know, take a look at this daily wave section here, wave analysis, by going to the Admiral website, and you'll see weekly overview of major currency pairs on Mondays. I myself was saying, you know, the safest spot is above the weekly high, and I just didn't follow my own advice. A bit ironic, but that sometimes happens when you start off the beginning of the week with a certain analysis and you have certain thoughts in mind. Okay, this is I'm going to use this, I'm going to use that. But then you kind of drift away as you start zooming into lower time frames and you start contemplating other options, and you kind of lose sight of the original starting point that you once had in mind. That can sometimes happen when during the process of trading. Now, if you like to keep sometimes a trick could be just to write things down, put things on paper. If you really want to remember that for the remainder of the week, put a yellow post-it, for instance, on the screen and say, okay, with the Aussie, I'm not going with a stop loss lower than this. So you always have that quickly in mind. Sometimes you tend to forget that when in the heat of the battle of trading as well, when setting up a trade. You just don't keep in mind certain elements that you were thinking of. All right, well, at the moment it still looks bearish to me, in all honesty. Now, of course, if I would be in that trade, I would just let it ride. Now I'm not in that trade anymore. So do I re-enter or not? I am not a big fan. I'm always a bit more cautious with re-entering because I have a feeling like I'm the stubborn person who wants to trade it again into the same direction. And I've built up a resistance to not to take a trade in the same direction after a loss too soon to avoid revenge trading. Even though I might not feel it as revenge trading, the classical sense, like really being upset about a trade and taking that trade, that I wouldn't have. If you have that, you probably want to avoid trading at all. After that loss in the same direction for a while. Not that, but still, I want to avoid even the slightest kind of potential that it might be a revenge trade, even though I don't think it is one. So that's always, I think, a bit difficult. Even though if I have the same analysis, do I want to enter again, and at what point? Because I want to remain objective, and if I have a loss, I have serious doubts to some degree whether I can stay objective. So it's always a bit of a toss-up here, whether I take a second trade or not. In my opinion, though, that set aside, it's still, it is above. Obviously, the hourly is an uptrend because it's moving, it's been zigzagging upwards, right? Like this, sorry. Somehow I opened my drawing tool this morning, 1 second. Pardon. So it's been zigzagging like this, up to resistance. If you look at it from this perspective, in my opinion, this is still very much resistance here, right? A lot of resistance. Where's more space, down or up? Well, it must be down because there's a lot more space, first of all, to the bottom than there is to the top. But does that mean the price has to go down? No, it actually doesn't. But the odds, I still think, looking at this specific support or resistance question, plus looking at the bigger trend, which is down, yesterday's intraday uptrend, I think it will only remain at that intraday. And now I think there's a good chance at least, bears should be taking control back for downside push, but I could be dead wrong. But there is a good 4-hour candle here at the moving averages. So if you put a fib on this last swing high, swing low, you can see the price, for instance, hit the 38.2. It could even retrace to the 61.8 before it perhaps makes that fall that I'm talking about. So this is just a random analysis connecting various things, support and resistance, trend, momentum. Not necessarily a strategy as yet, is it? So with regard to strategy, now I'm going to discuss, with this as a background, let us discuss the various, let's say, ways we can approach this euro dollar. So I'm going to discuss various strategies now in connection to this euro dollar, but just wanted to give you a background info first. By the way, apologies for the kind of confusion regarding the time. I can see that today there are a lot less people than usual. Maybe that would have been so otherwise as well, but there was some confusion yesterday about the time. But from now on, it should always be back to the normal time at 7:45 a.m. GMT. Yesterday, there was an email sent out that it was at 9 a.m. for yesterday's webinar. Maybe that caused confusion for today too. I'm not sure. But from now on, that next week, Tuesday and Wednesday, should be back to normal. The problem should be solved, and all communications should point back to the 7:45 a.m. GMT time. So sorry for that. So when looking at various strategies on the $0, let's start with the daily chart. Looking from the daily chart, there is a kind of a shooting star in the moving average in the 21 band that could merit an entry, in fact. That's the moving average perspective. For our chart, moving average perspective, also we have a candlestick here, could merit an entry as well. Stop loss above it. The other option would be to wait for a 4-hour candle close below the 21 band, but that's of course a bit of a later entry than now. Hourly chart, there's no setup at the moment because the moving averages are bullish. Same for the 30 and 50. So how about trend lines? Let's look at pivot points first of all. H3 short with a stop loss above the H4. That would be a setup for Camarilla. Or let price go to L3, let it bounce, and then take the next break below L3 for a target at L5. Excuse me. The 1-hour chart would require, from pivot point of view, would require, let's see, I would like to see probably, from a pivot point of view, I would like to see a break and actually a pullback to the pivot points. And then a bounce off those pivots at the blue circle. How about trend line perspective? Let me clear up the chart and fibs. So I want a blank chart for that. And here too, we can of course use multiple time frames to do the same. One trend line could be below this trend line, a break below this trend line, or a break below this support level. 4-hour world actually only has a trend line on top. If you connect these tops, you clearly see prices at a resistance. So what do we have here? We have price hitting that trend line and showing a big wick. So from a trend line perspective, we could also look for a bounce trade off of this trend line. That already happened. So that's not anymore possible. We could look for a hook back to the same trend line, which would mean a short at around 124.20ish probably. The other option, of course, would be if price manages to break through these resistance levels. Then there could be a breakout up. But I'm not going to take that one until last week's high, which is up here somewhere, is broken. So I would not take the breakout to the upside. Last but not least, the fibs. Now the fibs, we can use it in various ways. We can put fibs on logical swing highs, swing lows using oscillators. Or we can use a very mechanical way of fibbing from retracement to target. From retracement to target requires a lot of fibbing on different legs. So I'm not going to do it on all time frames because it would take forever. It would start to be boring. But we can choose a time frame and see, choose the most effective time frame at this moment. The most effective time frame, I think, is the 4-hour chart. It gives a clear picture of the downtrend and the fact that we're at resistance. The hourly could confuse us because it's still in it's on an hourly uptrend. So when using the 4-hour, we can fib the most natural swing high, swing low, which is this part right here from bottom to top. You can see price is at the 78.6 fib, or stopped at the 78.6 fib yesterday. when it made a high of 124.48. Other way of doing it is the mechanical way, and then you can really start all the way from the top here, put the fib on the first swing high, swing low, and what we're looking for is the first time price hits the minus 618. Then we drag it from retracement to target. And we drag it from retracement to target. What do we see? When using that, in fact, we can see that price hit the 886 fib here. Now, the target, the main target, changes when a deep fib is reached. If it's a lower fib, 61.8 or lower, we're looking for the minus 618 to be hit. If price does retrace as far as high as the 78 or 886 fib, then we're actually looking for the minus 272 target. So let me check if I did it correctly here. Actually, here it meant the minus 272 target. So let me do it again. I have to do this swing high, swing low. Excuse me. It stays the same. Alrighty. If that's unclear, let me know. Taking it from target, retracement to target, I find out that we actually at 122.40 just hit the minus 272 target. Could be part of the reason why we're having such a strong bounce at that level as well. Because we can see we also bounced pretty strongly at this minus 272 and now at this minus 618. So we can move it from the highest retracement point, which is this one, to the new target, which is this one. And you can see that in this scenario, if we use this fib from here to here instead of from here to here, we hit the 50 fib instead of the 78.6. Still a good fib though. So I will repeat that indeed. Basically what you're looking, this very mechanical, non-discretionary way of fibbing can be done on all time frames. Well, I haven't done it on very low ones like 5 minutes, 1 minute, but basically, okay, any let's say, normal size time frame. And what you're looking for is putting it from the first fractal to the second fractal, or from this fractal here to this fractal. Any starting point. What is a starting point? Any top or bottom, right? Here we can clearly see that this particular down run ended when we had a correction like that. Probably. I mean, you could, in theory, go all the way back and start from the very, very top and start fibbing it down, but that would take a lot of time. If you do this regularly, then of course it takes less time because you're updating it regularly and you don't have to go back that far because you know where to start. But let's say that this is the starting point. We want a clear kind of top, at least. So what we're looking for is from this fractal to this fractal. And you see price went back to the 78.6 fib. Before we can put on a new fib, price has to hit the target. For the 88.6 and the 78.6 fib, the target is in fact the minus 272 target. For the 61.8 fib and lower, the target is in fact the minus 618. That means as soon as price hits those targets, we can move the fib. So we move the fib from retracement to the new target. And we're always looking from fractal to fractal. So we're looking for a retracement to any of these fibs. Any of these fibs could be entry spots. It could be at the fib, or we can wait for candlestick patterns at the fib to take shorts in here. Price falls down to target, stops at the minus 272, bounces, then continues to the minus 618. We can then now move again the fib from taking it to highest retracement point to fib target. Once again, I'm not taking it actually to the target itself. I'm taking it to the fractal that is the first fractal after hitting the target, to be very precise. Then we can see the price went back to the 38.2 fib, went to the minus 272 target, then went to the 50 fib, and then fell to the minus 618 and bounced. Pretty neat, these fibs, isn't it? You can see how nicely they respect these levels. And this can happen. Don't be surprised that price makes sometimes a shallow retracement, hits target, but then goes to the higher fib. And this is where often traders get smacked, because they see it go for the 38.2 to the 7.2 target, for instance, and they start fibbing this swing high, swing low. And of course that, as you can see, turns into a loss because price exceeds that level and then falls. Sometimes it happens, right? You enter a trade and then you get stopped out and then you see it turn and fall your way. Well, if you fib this swing high, swing low, that just happened indeed. It's too small of a fib in this case and too dangerous. So that would have been a loss. But if you kept the fib on the original swing high, swing low, you would have been in total control of the situation because you would have seen the 38.2 fib. You know that the 7.2 could be a bounce that could bring it all the way back to the 50 fib. And it depends on your management, how you capitalize or stay in that trade and what you do with it. But, I mean, you wouldn't be taking a loss by fibbing it here. You might be re-entering at the 50 fib, though, perhaps. So it's only positive things. So then we take it again from the retracement down to the target. And we can look for entries again at these fibs. So if we take away the first fib, we're at the 50 fib. So any of these fibs. In theory, when looking at fib strategy, the secure stop loss is still above 126. Yes, that's far. So definitely and loose. More tighter, or I mean, yeah, maybe more conservative, I should say. Tighter stop losses could definitely be above last week's high. I put one way in here, as you can see. Now, from a 4-hour perspective, how tight that really was, in fact. Too much tight. Right? If anything, the weekly high, or at least this top, should have been used. So that is going in my evaluation, right? That for the week. Now, in this case, we have another fractal here. So I'm feeling more comfortable with using the 124.60 level and not necessarily the entire weekly high. Just in case we get to the 61.8 fib, no, actually that would not make sense, sorry. We shouldn't get there anyhow because there's a trend line here. If we do get there, then there's a bit of a break going on already. So basically, also there's a pretty good candlestick pattern here. So the stop loss could be above that. So conservative. This is the medium approach, and this is a more aggressive approach, but still within reason. I mean, for stop loss placement. Why still within reason? Because there's two fractals. There's a pretty strong retracement of this weekly candle. And we're falling from it, so. And bigger downtrend already. And one more thing, now I forgot what I wanted to say. I don't remember. Anyhow, point is that fractals and the candlestick pattern are good things, so it's a reasonable balance. More aggressive, but reasonable balance for short, for placing the stop loss for a short. And we talked about already the entry potentials for shorts. Now, this is my 2 cents with regard to the analysis, but also the strategy. Still be a shorting environment. When would the environment change? At what point would we be bullish on this euro dollar on the 4-hour chart? It would have to break this 126 level. When price pushes through the 126 level, before hitting this minus 618 target, although if I may add a discretionary tip, I would be looking for the minus 272 target, to be honest. The minus 618 target is below the weekly bottom, and in this regard, I don't think aiming for below the weekly bottom is a good idea. No. So, this is a non-discretionary strategy. It says this is the target. But if you add support and resistance analysis to it, then you realize that it would not be optimal. We better aim for the minus 272 target. So unless price gets to the minus 272 target, this fib is still valid. If it breaks, unless it hits the target or breaks this top. If it breaks this top, then the upside fibs on the 4-hour chart are valid. Now, on an hourly chart, if we use the same philosophy, what we just did for the 4-hour, but for the hourly, we can start fibbing the most. Let me get rid of this fib, or let me just put it on 4-hour. Let's go to the hourly. I want to show you something different. Is we're looking for tops and bottoms. So let's take a look. On the hourly chart, the most recent top is here. Let's face it. I mean, this was a pretty big consolidation. So let's start at that point. We put a fib from the very first high to the very first low. And you can see price went from 61.8 fib to target. Then we hooked back, but didn't get to a higher fib, and ultimately fell to target. Now, I'm not going to put the fib from here to the target because prices kept falling. So we'll just put the fib from retracement to target, the first fractal, and ultimately price crawl back to the 38.2 fib, then to the 50, then to the 61, then to the 78.6 fib. Nicely, as you can see, these fibs, all these fibs being respected. Now, this is a pretty big fib, so before we hit the minus 618, it's going to take a while. And, oh, interesting enough, look at that. This minus 618 had the same level as the 4-hour minus 618. So there was confidence. So we can take it again from this swing high to the target. And there's a small difference. The 4-hour fib was, price was hitting the 50 fib on the 4-hour chart, and it's hitting the 61.8 fib on this chart. So the upside fib is still valid here. The downside fib. One, if you would like, you could still put a fib on this upside. Why? Because sometimes reversals are dangerous. Not dangerous, but strong. Yesterday I was already talking about the fact that price could get up to the minus 618 target, remember? Actually, it exceeded that level, which is something I should have planned on. It can happen sometimes. That's why sometimes if you want to use a tight stop loss, it's better to wait for some candlestick pattern reaction. If you did that, then yesterday we didn't help that much either because there was kind of a shooting star here, and if you took that one, then that didn't help either. So it's not always perfect. But they do give some, a higher percentage chance that price will stop at the minus 618 target. In this case, it just went to the minus 1,000 and didn't break this top. So instead of putting it here, I should have put it here, and I would have been in that trade. Now, price is indeed moving bearish as we're expecting and pushing to this trend line. So it looks like we're getting the turnaround here. As you can see, the zigzag from target to target, from retracement to target, would require us to move the fib from here now to here. That is the valid 1-hour bullish fib. I would not trade based on this. But it does indicate that if this bottom breaks, that there could be, that's the end of the hourly fib, and it could be an extra confirmation of a breakout. That's really all I wanted to say about this bullish fib, basically. Besides that particular analysis, it's also good, like we did yesterday. The idea was good, the execution wasn't. The idea of a zigzag indeed happened. That was true. Just didn't execute it smartly enough. Alrighty. So anyone who's likes this Fibonacci, I mean, you could really take it anywhere in here for a trade, or even upon the break at the bottom, as I said. But if you take it upon the break at the bottom, the stop loss must be here, must be tighter, cannot be very loose, because otherwise the reward to risk is getting a bit maybe too much, or out of proportion. So I hope that, did that help Justinus? Is that a better explanation? Good morning, Bjorn. Good to see you here. Sorry about the confusion regarding the time. If that was it, I'm not sure. But next week and all the weeks after should be as usual at 7:45 a.m. GMT. Yesterday was an exception. Okay, cool, Justinas. Happy to hear that. So you can use this. You can fib, counter fibs with trend fibs on all time frames, and identify what is the key level that would break the fib bottom or top. Daily, basically that, and you can use these levels to, for instance, okay, or let me say it this way. Let's see. You can use it on multiple time frames for confluence, for scaling in and out, identifying key levels, and of course trading it from target to retracement, trade retracement to target. And sometimes it's going to be contradictory. Sometimes you could have on a 4-hour chart, for instance, you could be having, let's say, a downtrend going on, and you see a hook back like this. Let me think for a second. I want to give you a good example. And then you see, potentially you could take a short at this fib, right? And you see price making a fall again. What you can do then is zoom to the lower time frames. Take a look at this smaller retracement and scale in once more on the 1-hour time frame. So you have, for instance, another short going that direction. Now this is of course riskier. You might want to be careful not to put them too close. But the idea is that, if you have a 4-hour setup, that there is potentially more swing highs, swing lows that can be fibbed on the lower time frame in the same direction. So that's the euro dollar. Anyone have any preference for a particular pair? I normally choose. So do you have anything in mind? And Nicola is looking for the gold breaking the bull flag indeed. Darshan talked about it yesterday. Not sure if Darshan is in today. Let me take a look. Not today. But Darshan talked about it. He saw it, the momentum, bull flag, and indeed the break is happening. And the break left us up to the -1272 target. So you can see by still putting the fib on the original swing high, swing low, you can see it's stopping at all these fibs. Using the fib strategy, of course, we know that we can move the swing high, swing low from here to here. And this was an awkwardly bit of a smaller break, which is a bit unusual. And now approaching the -618 target, but this is actually not valid anymore. We have to put the fib from here to here. Getting close to the -272 target. That could still be a turning spot for gold, I would say. Let's take a look at the daily. Could be a turning spot, but with the break of this orange trend line here, the resistance line, it's actually something we have to be careful of shorting, because in the meantime, it's on this 4-hour chart, it's kind of counter trend. Right, so it would be more of a bounce reversal trade. Now, how long this trend can last to the upside? Maybe not that long, because here's already a weekly resistance spot. So that could be a tough level to crack through the 1250. So in that regard, there could be some space to the upside left, but not much before we do hit resistance. And it could be indeed that bounce turning spot as I talked about. Alrighty, pound dollar yeah, could finish that zigzag up to the minus 618 target. If we're talking about zigzags, let's continue 1 second. And if you put a fib from here to here, you can see price up to the minus 272 target. So if anyone is in a downtrend, I mean in a short, then the 50 fib at 156.10 could be a good target to aim for, because we know sometimes it does this up, down to the 38.2, up to the target, then down to the 50, and then up to the minus 618. So if you're in a short here, then the 50 fib for the moment would be the main target, unless it breaks below the target. Maybe then, of course, one could re-enter for lower levels, but for the moment, that would be probably the primary target, unless, of course, you're taking some position swing trade. Pound dollar 2 making some aggressive momentum to the upside, but overall still more in a downtrend. It's not as great of a downtrend as the euro dollar. Why? Because look at the 21 band. It's actually very close to 89 EMA. The euro dollar is a bit further away. Small difference, but you can see the gap between the moving averages here more than on the pound dollar. So the euro dollar had more bearish momentum than the pound. The pound is in a downtrend, but also we have to realize that the last month or so, price has gone pretty sideways too. So, I mean, historically you can see there were a lot of sellers here around this level. But price didn't manage to break much lower either, did it? So in that regard, I still think it's a good shorting zone, but I wouldn't be exaggerating with the target to the downside for the moment. I don't think that it makes sense. It looks like price is stuck in these orange lines. So I would not aim much below or probably at the bottom of the orange line there. If anyone is in the short, that's what I would do. If you're not in the short, it's possible to take a short now with that as target. Looking at candlestick patterns too, it looks like a bearish level there at the H3, so that looks like a good short. Maybe you already shorted at the H3 with a target at the L4 basically. Stop loss could be above the H4 here. Dollar yen retraced all the way back to last week's low, bounced off the low. As I said in the weekly heads-up recap, candle lows and highs of the dollar are going to be important. Don't want to see a break of those, or shouldn't expect to see a break of those. And despite the dollar yen downside, it didn't break last week's low indeed. And so this is still a bouncing spot, although we already made a kind of a bounce here. Could make another bounce, could make kind of a zigzag up like this. So expecting indeed a bounce at 61.8 up to the minus 618 target for the moment. Excuse me. But I'm not a big fan of the dollar yen. However, it looks more like a longing zone. Looking at the fibs. Now the moving average already are bearish in the meantime, so that would be counter trend. But from a fib point of view, it would be looking more like upside. Now the dollar, the yen, I mean Japan has elections on Sunday, so maybe part of that volatility has to do with those elections, which will highly impact, or have a good chance, I would say, that they will highly impact the yen currency, and therefore, hence, our currency pairs in the forex market. So something to be very cautious of. Maybe that's why we're seeing a bigger volatility. I talked about the zigzag potential yesterday, that I didn't like the short despite the downtrend, right? Remember? That indeed proved to be true, because we were talking about that here because it was looking pretty bullish. Price action was moving bullish, remember? And look, it did move up even higher. And the reason was just because if you look with your eye here, you can see that this is more corrective and that this had more steam. So price indeed moved up to the, let's take a look here, up to the 1,000 target, accelerated, past the minus 618. And yeah, the question is, was that a zigzag like this completed, or is this part of a zigzag? Is this now one leg of the zigzag and this is going to end up like that? We never really 100% know, of course, but I think that the zigzag already has been completed. So I would expect more downside. Pretty good 4-hour wick here too. Now, of course, if price gets above that high, then things are different. For the moment, I think it's still more bearish. We do have engulfing bullish twins, but it's still within that downtrend. Let's take a look at the daily. Daily is a doji, something maybe to be more careful of. Obviously, we're pretty far from the 21 band on the daily, so there could be a chance that we eventually go back to that and retrace a regression to the mean trade back up. So there could be perhaps that zigzag. So yes, we're on a trend, but we could have a zigzag too. Difficult. Probably going to have to wait for some confirmation. Maybe these trend lines could be good confirmation levels. Break of these levels could indicate the bullish zigzag or the downtrend continuation. Dollar CAD is just going sideways for the moment. Pound yen had a very big fall, a few hundred pips fall. Crazy. Kaylin is saying 84.10 and 83.90. Are you using the fib? Yeah. 83.90, got it. Yeah, that's the minus 722 target indeed. From the 4-hour perspective, from the 1-hour perspective, from the 1-hour perspective, we hit the 886 fib. And we got a minus 618 target at monthly pivot point, weekly, daily S2. But the primary one for the moment would be minus 272 at 84.40. Yeah, let's see. Oh, you were talking about the Aussie. Okay, that's funny because the levels could have meant actually funny enough for the pound yen too. Let's see, 84.10. Yeah, that's indeed a good confluence up in here. Stop loss above last week's high could be safe. 83.40. It is quite spacious though. True. Safer one will be a stop loss at least above the 84.75 because of the minus 618 target potential. Yeah, with the 84.10, I mean, I think it does make sense if it gets there. But that's something that remains to be seen. It's difficult to say. We kind of had a zigzag pattern already, and we don't see it on this hourly. So it'll be interesting to see if we can break below the support, or if we do break above resistance, whether we can stop here or here indeed. Kiwi had a good setup at the H3. And I have my stop loss now above this high here. on a Kiwi short. Two basically looking for dollar strength. It's the same thing. Yes, I mean this week we've had dollar retracement so far, dollar weakness retracements. Will the dollar strength continue? And I'm expecting yes. So the Kiwi will be a similar story here, and we can use various strategies to identify targets. Maybe we can use this 4-hour chart. Alrighty. Close to the 50 fib 2. Target therefore 75.40 for the moment on the 4-hour chart. Looking bearish too. And yeah, what level? I mean, it all depends where one wants to trade, but yesterday taking a short here at the retracement certainly wouldn't have hurt it, or this pullback, or even the break below this 76.80, but then a tighter stop loss needs to be used down to the -272 target. Let's take a look at the 30. And when we look at the 30, we'd like to see price actually hit the L3, preferably bounce and then break down for to L5. When looking at the weekly chart, weekly candle, what I look for indeed is the high and the low, but not only that, but indeed the open and close too, because it shows whether the candle is bearish or bullish. So I look at whether it's bearish or bullish, and the size of the candle, and whether there are any wicks, basically. How strong is the close compared to the low? How strong is the how strong is the close compared to the how strong is the close compared to the low, or the strong compared to the high? The close compared to the high. Getting my words mixed up there. So for instance, this candle is sizable here, big, bearish, and the close is near the low, indicating bears were in control. This candle, where I have a blue arrow, was bearish, but there was a bit of a wick, and it wasn't as big, so it was not as decisive as the candle with the red arrow. Now, it could just be a small in-between candle before the downtrend continues. So all in all, usually speaking, the weekly high should still be pretty relevant. But there could be some more caution perhaps needed. Whereas if you have a big candle like the red arrow candle is, you probably will not see a very big retracement either. You wouldn't see maybe a big retracement all the way to test the weekly high. Whereas with the smaller candle, that chance is higher. All weekly candles, when there's a trend momentum going on, usually have lower lows, lower highs, or higher highs, higher lows. In this case, most candles here, the highs and lows are lower, with a few exceptions where we had a bit of retracement here. And here. So indeed, looking at the weekly chart, and the candles already provide pretty useful information about strength, momentum, direction, retracement potential, stop losses. So pretty useful, pretty useful and valuable information, I think, definitely. Alrighty, other than that, the euro yen and pound yen, not really in a mood to trade them, I would say. I mean, there could be pretty big zigzags here. Dollar yen could be in a zigzag. So I'm not really jumping for joy to trade these two. Let's take a look at euro odd. Pound odd, the reversal, we talked about the potential of a reversal from 190.80, remember? But that really didn't happen. Price fell yesterday from the level, actually we were looking at this fall together. And the only thing price did was bounce at 187.50. And then retested 189.50 and moved down again. So the only thing it did, it moved some up and down. I mean, it made kind of like a wedge pattern here. So in my opinion, a short from that higher level still, or at least looking for a bounce at the higher level makes sense. Or even looking for a bounce here for the upside. Could be valid too. I don't know, not jumping for joy, but to trade this last piece up. I'd rather probably wait for the reversal trade. Euro New Zealand, let's see, has a 61.8 fib here, plus if you use this swing high, swing low, like this, there's an 886 fib too. So looking for a short around 162-ish. That's something that caught my eye this morning. What else? Let's see, the GU, Kalian is saying a discretionary doubt. Let's see, on GU, Kalian expected the weekly resistance. Weekly resistance at 56.25. And last week is a pin bar and the level resisted. How do you see that? I'm not sure if I understand. Let's see. On GU, I expected the weekly resistance 56.25 and that it would not be broken, but price went through it. Okay. Last week is a pin bar. Alrighty. Let's see. You mean these lows here, right? These lows on the left, these weekly bottoms. Price pushed through it. You expected that they would be used as a resistance. I understand. It is possible. The only thing is, though, that if price doesn't pull away from it, let's say, I would expect the price to have to pull away from the support level a bit more before it becomes a pretty good resistance spot. If we zoom in, what I didn't like about price stopping at this level, although it could, was the fact that it didn't break much before it started to move up again. Was in my back of my mind when looking at this upside. It still could have been a level though, but it was less valuable as a level because of the fact that it didn't break below it that much before it already started to move up. That was just in the back of my mind. Other than that, I don't think there's anything wrong with that resistance spot as an entry necessarily, or using it as a potential entry. But price did push through it, and that can happen sometimes. If we look at the weekly candle again, a short there is still good as long as the stop loss is at least above last week's high. and some retracement here is now going on. So all in all, I really didn't think anything else than that, to be honest. I recognize the fact that indeed the price is broken, but it didn't seem like a clean, neat, clear, decisive break as what I could see from price action. So although the level still had some validity, it wasn't as strong of a level as I normally would attach to it, if you understand what I mean. Last week's high, though, of course, is a clear level. Not only last week's high, but I would add probably the high of 2 weeks ago, which is basically this daily fractal here. So I don't know if that makes sense, or if you want to add something to it. Yeah? Okay, cool. It's difficult. I'm not saying it's easy to make that judgment in real life, by the way. And yeah, sometimes we just have to make a educated guess and just take the risk. I mean, otherwise we get into a paralysis of analysis, which also doesn't help. We have to sometimes make a judgment and go with that. Sometimes also a bit of intuition. If an analysis is bordering on a yes or no call, often enough stop loss placement would help, and using a fib, for instance, for extra confluence. Is there some confluence at that level? I don't remember if there was any. If not, of course, the level is becoming weaker. Let's see. On the hourly chart, the current fib valid is actually from here to here, as far as I can see quickly. The price was really challenging high to the 886 fib. And the target will be the minus 68. No, the target will be the minus 272, in fact. 155.26. And breakout trade could be, let's take a look. Could be actually right now, in fact, or soon. Looks like the price is trying to break through this support level, but hasn't done that as yet, but it's trying to, so it could be soon. Looks like a rising wedge in that regard. Let me take a look at Camarilla. The pound is always a bit tricky. Oh yeah, I was really talking about it. Yeah, the L3s. The L4 was the target at first I mentioned when looking at the fibs, right? Because of the 50 fib. Yeah. So let's see. If it L4 doesn't have to be a bouncing spot, it could be though, but doesn't have to be. It could also go down to L5. You see, this is sometimes a bit contradictory when you look at various strategies, of course. On a 4-hour chart, the target would be the L4. I mean, on the 30-minute Camarilla, if we break through L3, we would expect it to go to L5. Sometimes they don't really line up as a neat link. So we have to make a judgment call if you want, or just avoid it in total, which one of the plans makes more sense. In my opinion, both are really valid. If one takes a short already here, it could make sense to aim for L4. If you're taking the break of L3, then I wouldn't aim for L4 because that's too close. Either skip it or aim for L5. Depends which entry is taken. I'm still dollar bullish, basically. I could be horribly wrong, but that's basically what the charts are telling me, at least, how I use fibs and stuff. So, and moving averages and trends. Kalian says, I thought using a bigger stop loss and bigger target makes a good trade, but things turned bad as of now. But that's the thing, you're still in the trade. The fact that the currency is going against you is actually the reason for using a wider stop loss, in the sense that you're still alive. I mean, if you would have used a tighter one, you would have had the loss. Just because the currency, of course, goes against you, might require a bit of adjustment might be annoying. I don't know if it is for you or not. I mean, if I look at your comment, it seems like it's not so pleasant for you, but I might interpret it wrongly. Because you're writing things turn bad as of now. But, you know, it really, because it seems like attaching an emotion to the state, and I understand that. I mean, many do that, by the way, and I still do that. But if you think about it, it really doesn't matter what it's doing now. Ultimately, it's what is it doing when we exit. Where is it when we exit, actually, right? As long as, of course, our stop loss doesn't get hit, it can do anything it wants, really. Now, if the advantage of having a wider stop loss too, of course, is that if things do go against us, we might have enough time to exit at a better level. Is this a spot where you might want to exit? Well, I think we're close to resistance, so probably not. But the only thing that could happen is the zigzag here up to the minus 618 target. Let me take a look at the weekly candle. The target is right, that minus 618 target is right at last week's high. So if the stop loss is above last week's high, then it should be okay. I mean, if you didn't go right at the high, because price could still touch the high and then turn, make a double top there, but that should be okay then. Will price get to the last week's high at the minus 618 target? We don't know. It could, but it doesn't have to. There is a kind of a shooting star yesterday, and there is that downtrend. Plus, price is pretty slight downtrend. Plus, price is indeed close to that resistance. So, could be enough ammunition to see price fall and put short traders back into positive territory. Yeah, okay. I understand. That makes sense. You're not happy to see it. Yeah, that I can imagine, of course. That's logical. We would preferably like to see price go our way, indeed. That is logical, sure. Ultimately, if one uses a wider stop loss, this type of thing does tend to happen. You know, with a tight one we get a loss quicker, and a looser one we're going to see more indeed price battling against us perhaps before it goes our way. It doesn't always have to go our way, by the way, but there is of course that chance. So that's something that doesn't kind of go together with that. So yeah, there's always advantages and disadvantages in various approaches, and which one we use also depends on our own preferences, our own ability to monitor stuff and keep an eye on it and stuff like that. So it depends from person to person. There's no right or wrong regarding tight, conservative, loose, stop loss. But yeah, there's advantages and disadvantages still for everything. For targets, entries, stop losses, indeed. Yeah. And that can be tough sometimes to hang in there, but sometimes actually having a basket of trades helps. Now, of course, we want to make sure that that basket of trades is not a total risk of more than our standard risk. But by trading more positions at a time, we at least have kind of like maybe the feeling that we're not dependent on one trade. So it's kind of spreads the focus on various setups. There's, in myself, I mean, when I trade discretionary, I don't do that. I just focus on a couple of them. But there is another strategy I use that is more of a basket trading. And I noticed that when I do the basket trading, that one setup is kind of like getting less focus, which is sometimes good because I kind of like more let it play out in a way. I have less tendency to intervene or make trade management decisions that are sometimes too early. So that's sometimes the advantage. So let's see. It is annoying, of course, that it is in that bullish sentiment now. And before it gets into bearish sentiment, I guess it would have to break through this trend line, indeed, at least L3-ish. Your cat pushing up again, but at resistance now, so nothing new. Odds we see nothing. That's I guess about it for today. As far as I can see, nothing else that I wanted to take a look at. So thank you for joining us. Thank you for joining me today. And then I will be back tonight. If you want to take a look at that, you can find it here at Education. He's going to talk about counter trend trading. If you want to take a look, I mean, be up to date when my wave analysis is posted or the weekly analysis is posted, you might want to follow my Twitter. It's taking a bit long. I don't know why. It's at my name, Chris Svorcik. Otherwise, in the meantime, tomorrow we have a pro learning lab, by the way. We take a look at the balanced approach. And I'll talk you through kind of a blueprint for the entire trading. Not just like specific one, focus point, not one topic, but a kind of more of a all-around approach. We're looking at the bigger picture instead of focusing on the details, perhaps. So that's tomorrow. Tonight, that's webinar tomorrow, our webinar about that, and this is my Twitter address here, is at Chris Svorcik. So that wraps up the webinar for today. Hope to see you tomorrow and later today, and thanks again and good trading. Cheers.